Today is October 20th, 2025. We are looking at Altria Group, stock ticker MO. This is a large tobacco company. Many investors own this stock for its dividend income. The first question is always about the company's performance. Altria recently reported its financial results for the third quarter of 2024. The numbers give us a clear picture of its current health. These facts are important for understanding the business. They help us see if the company is earning enough money to support its operations and its dividend payments to shareholders. The facts from the third quarter report are specific. Altria's adjusted earnings per share, or EPS, came in at 1.38. This number was a positive sign for investors. It beat the analyst estimate, which was 1.35 per share. On the other hand, the company's revenue for the same period was $6.26 billion. This figure was slightly below what market watchers had expected. Even with the slight miss on revenue, the company showed strength in its bottom line. Net earnings for the quarter increased by 5.9% to reach $2.29 billion, a very large sum of money. Looking beyond just one quarter, the company provided guidance for the full year. This guidance gives investors a sense of what management expects for the entire year of 2024. Altria stated that it expects full-year adjusted diluted EPS to be in the range of 5.07 to 5.15. It represents a growth rate of 2.5% to 4% from the previous year's figure of 4.95 in 2023. Altria is famous for its dividend. Let's look at the specific numbers. The company pays its dividend to shareholders every 3 months. The annual dividend per share is reported as 4.12 by one source. Another source calculated it slightly lower at 4.08, based on a recent quarterly payment. The most recent dividend that was paid out to investors was on July 10, 2025. The amount for that specific payment was 1.02 per share. Shareholders who owned the stock before the ex-dividend date of June 16, 2025, received this payment. Looking forward, the company has already announced its next dividend payment. The next payment date is scheduled for October 10, 2025, which just passed. Shareholders who owned the stock before September 15, 2025, were the ones eligible to receive it. For this payment, the amount was increased to 1.06 per share. This increase is a significant detail. It shows confidence from the company's management. This history of increasing dividends is a long one for Altria. The raise announced in August 2024 was the 59th increase in the last 55 years. Now let's talk about the dividend yield and payout ratio. The yield is the annual dividend divided by the stock price. It tells you the return you get from dividends alone. Based on a 4.12 annual dividend, one source puts the yield at 6.27%. Another source, looking at the trailing 12 months of payments, calculates the yield at 7.92%. These are very high yields compared to the broader market. The payout ratio tells us how much of the company's earnings are used to pay the dividend. Altria's payout ratio is about 78.9%, based on past year earnings of 5.17 per share. Altria returns value to its shareholders in two main ways. The first is the dividend, which we just discussed. The second is share buybacks. Buybacks reduce the total number of shares outstanding. Each remaining share represents a larger piece of the company. Buybacks can boost earnings per share. This is a key part of Altria's financial strategy. The numbers on the buybacks are large. From 2020 through 2024, Altria repurchased a total of $7.9 billion of its own stock. In 2024 alone, the company spent $3.4 billion on repurchases. The program continued into the new year. In Q1 2025, Altria bought back another $326 million worth of its shares. Following that activity, there was still $674 million remaining under the company's current share repurchase authorization. When you combine the dividend payments with the share buybacks, you get the total capital returned to shareholders. From 2020 through 2024, Altria returned nearly $40 billion to its investors. That shows a strong, consistent commitment to shareholders. Altria generates a large amount of cash from operations. Rather than spend it all on new investments or acquisitions, it sends a large portion back to owners. Returning capital is central to the investment case. The company operates in a mature industry with limited high-growth opportunities, so management focuses on running the business efficiently and rewarding owners. Altria expects to pay roughly $7 billion in dividends this year and in 2025. Combined with ongoing buybacks, that provides a powerful, direct return to investors. A key part of the business is the smokable products segment. This is the core of Altria's operations. While cigarette volumes are declining, the segment remains highly profitable. In the third quarter of 2024, adjusted operating income for this segment grew 7.1%. That growth happened even as volumes fell. The driver, pricing power. The company increased net prices by 10.6% in Q3. The segment achieved very high adjusted operating margins of 63.1%. But the decline in smoking is real and persistent. That's the major risk facing the company. Domestic cigarette volume fell 8.6% in Q3 2024. For the first 9 months, volume was down 10.6%. By raising prices, Altria has offset volume declines and continued to grow income. The key question: how long can this price strategy be sustained? Now let's look at valuation. Altria trades at about 11 times projected 2025 earnings. The forward PE. The S&P 500 trades at a forward PE of roughly 21.1. By that metric, Altria looks deeply discounted versus the market. That low valuation reflects risks like falling smoking rates. Analysts' consensus: moderate buy. Based on 4 buy ratings, 3 hold ratings, 1 sell rating, the average 12-month price target is 65. Price targets range from $57 to $72. Recent price is $65.40. Analysts see the stock fairly valued today with limited near-term upside. We have the company's guidance, and we also have forecasts from analysts. What does the future hold for Altria's earnings? For full year 2025, management expects adjusted EPS to grow 2 to 5%. This is steady, predictable performance. Wall Street analysts have similar expectations. The average analyst forecast for 2025 is 5.43, range 5.40 to 5.45. Looking further out, 2026 average EPS forecast is 5.55, range 5.46 to 5.68. For 2027, analysts forecast average EPS of 5.76. These forecasts suggest the market expects Altria to continue managing its business effectively. The company is expected to navigate declining cigarette volumes, while still delivering modest bottom-line growth for shareholders. So, is the dividend safe? All facts point to yes. The company is earning more than enough to cover the current dividend. The payout ratio is in line with the company's historical policy. Management continues to increase the dividend, showing confidence in future cash flows. Earnings are projected to grow, giving more room to support or increase the dividend. High yield. Long history of payments. In conclusion, the future for an Altria investor looks very similar to the past. This is not a stock for investors seeking rapid growth. The business faces declining cigarette consumption, but Altria has been effective at managing the decline through price increases.